Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
Welcome, Auvorians, to a slightly late start to the midweek software strategy session. You call it the weekend forecasting. It all encompasses the same thing. We go through the Forex Factory and multiple charts, answer lots of questions on risk management. So welcome, everyone. Today is June 29th, almost the end of the month again. But just think, look at the calendar here I'm opening up. Look at that. We got essentially seconds to Friday. By the way, the Monday the 5th is the big holiday here in the US for 4th of July, which is celebrated on the 4th, fireworks, but then there's always a national holiday following that. Thank you for the heads up on my sound and vision. Appreciate that. Now, keep in mind, we essentially got 1, 2, 3. So I'm actually going to be flying into Orlando on Tuesday night, getting in on the 28th. I'll be in town because we're starting our new company First Down until the 3rd. If anybody's got any questions or any requests, I've already gotten a few. Let me know if you need any help with anything in relation to outside of the event. One thing I will say, and it's getting essentially a bit late, almost a little less than 30 days to the event, or at least in travel plans. There's a lot of people traveling to Orlando, and it has been an absolute hoop jump trying to get 4 seats on a plane that didn't have some just absolutely completely whacked out layovers and ridiculous ass seating arrangements, in addition to exorbitant costs. So the earlier you book your tickets, the more money that you have in your pocket, which is risk management. So posted in the channels, chat window, that is the link for all of our social media channels. It has been updated by our master tech guy, Stefan. Appreciate his work. And let's go into the calendar. So yesterday we had, and we'll go into some of the Aussie stuff, see if anything took place, but today's a holiday in Italy. Obviously the big discussion on Thursday for Governor Bailey. Bank holiday on Thursday as well. These OPEC meetings think it'd be real interesting. So I'll have to pay attention to the price of a barrel of oil a little closer to these meetings, and obviously the day after. Trading anything oil-based, in my opinion, on Thursday during these meetings, wouldn't do it. I think you're committing oil suicide. Friday, non-farm payrolls, the big one. Keep this in mind, would not be trading on Friday. This is also technically a pseudo holiday in the US. Why? Because anybody that's anybody in finance or trading or money, they're gone this day on vacation. Just keep that in mind because volumes are going to be lower. So with that being said, got any questions, open up the Q&A window. Let's take a look at the markets here. Notice I was peeking at some Bitcoinage here. Start off with S&P, all-time highs. NASDAQ, which is represented, I do, by the IXIC or triple Qs, all-time highs, okay? 20-year bonds still stuck in the lower range. I'm sorry, 7 to 10 year stuck in the lower range. 20-year, notice the chart looks the same. DXY, interesting that our multiple days of dojis here on the 3-day chart led to us to test higher. Many prognosticators think that we're going to break lower, including yours truly. Again, we could be wrong, as inflation may continue to potentially, especially the transient part of inflation, which seems to be the new mantra here in global macro speak, just wants to rally dollar and kill precious metals, right? I mean, it's typically what's been happening. It's a sort of capriciously inverse correlation between these two, meaning that it's an exact opposite effect. Okay, so just keep that in mind as we go back to test these levels. Not the biggest resistance line here, but we certainly could go back to test this, which would start to crack the thesis, if you will, of a lot of the dollar shorts, right? Like, you're going to look at this and say, oh man, this is a triple, this is a double bottom, or you can look at it on the weekly chart, make the argument that it's a double bottom, right? And now we're going higher. Certainly could be true for a period of time. I do think at some point, if inflation does not roil us, and I know a lot of our overseas Vorian subscribers and many internationally, they sort of like chuckle because the cost of gasoline and diesel is much higher in most of the rest of the world other than the Middle East. But as soon as prices of gas start creeping up around, $3.50 to $4 a gallon, everybody in the U.S. generally starts bitching about it. And that we could very well see $5 a gallon gas by the end of the summer, which is really going to put some pretty tremendous squeeze on focus back on domestic production of oil. So keep that in mind as those OPEC meetings play out. Again, I could always be wrong on this, but this is generally what my thoughts are. Cracking below the big 88, 20-ish, 88 area that has held for a long period of time, typically is a work in progress. So that's pretty much all I want to say on that. Let's take a look at CAD. Let's take a look at Euro CAD. Just a quick. Let's just quickly focus on the majors here. This daily chart of Euro US dollar. Do keep in mind that this is going to do typically what the opposite of DXY is, right? So here's DXY, same period of time, right? Opposite end of the spectrum, inversely correlated. I do see some pretty strong support here. Okay. So we peaked below it, came right back above it, which just has a tendency to solidify the strength as far as support. Pound, again, not much going on. We had obviously the big reversal here on the daily due to the dollar strength, and we've still holding to what I find to be the biggest support line in this area. So whenever you're seeing us sort of stuck in these areas, many of our subscribers get what's called MAV versions where you have to approve the trades and so forth, and or the fully automated versions of the software. The key thing really is that if we're inside these types of ranges in any currency on at least a daily, right, it argues for letting the martingale system play itself out, right, essentially accepting trades. It's when we break from these levels and we start to get what's called zipper effects, or just rips through what I call short and long barbecuing through areas, is really when you want to stay really, really plugged into and not stepping in front of the freight train, right? So GBP CAD, kind of the same thing. The request I got was for CAD JPY. Quick look at that for so not much has changed, still inside the range. Daily, take a look at a weekly, just perspective. We're up in no man's land. You could see where we completely broke the trend down. This is especially on a weekly, and we test that. Notice we came back to, I don't know if you can see that. Notice we came back to test that long-term trend line, and we just, ripped. This is not an example of something obviously we're looking at a weekly chart, right? But this isn't something I just want to step in front of. So if you drop back to the daily, you're going to see kind of the same thing take place from that break, right? But right now, we're, bouncing in an upper base, trading sideways, whatever you want to call it. I call it auctioning between the high and the lows, which is more of a futures term. But essentially, the software can take both sides of the trade. So if you're stuck in any, I would say if you're stuck in any longs from the high, then there's a chance we could go back down, test this, and possibly come back up and test the high again. So what else? Euro CAD. We already. There's Euro CAD. Still that tight range daily. The weekly, you don't get as much perspective. You see have sort of the edge of the cliff here at the spot 4610 area, 10ish area. I would say the real cliff right here is the 43 30ish area. But back to the daily, real tight range. This is coiling. Can't really tell just by what you're seeing here. It's all going to be related to the dollar, right? It's all going to be related to movement in both the Canadians' relation to the dollar and the European Euros currency's relation to the dollar as well. You got to look at those first, in my opinion. This is a pin action cross. Customer stuck in CAD JPY sells from December. Let me go back and take a closer look at that. The sells were from this 91-ish level. Wait, no, back December. Oh, God. So this is a great example if that, in fact, is the case for people still stuck in these trades. Why on earth? Because you can see where we broke the trend line. We were starting to look at the volume that picked up on this, right? I mean, even a lot of our empirical sweet indicator, which is a new one down here, this just indicates the strength of a particular lift. I mean, you just don't see much red on this break, right? You see a lot of green and a lot of white. And why on earth? In my opinion, obviously martingale does what it does, but I just would not have accepted trades in this area, knowing what I know. So whether these folks that are stuck in these trades have been watching us talk about this break was a fair amount in this area, because I drew a green line. Typically, a green line tells you I spent a lot of time on it, and it's an important area from the perspective of both a daily and weekly chart. Okay, cool. Yeah, I'll tell you, it's funny. It's we were out in Arizona, and our Lake Havasu broadcaster from Saturday, and the gas is $3.15 a gallon, and everybody was bitching because usually it's high twos, right? It's not a lot of taxes in Arizona, but gas typically $1 cheaper or $1 more, I should say, here in SoCal because of the taxes. I know a lot of people get. They laugh at that, but that's why there's so many monster SUVs in this country versus Europe, where it's $8.50 a gallon, and diesel's probably the way to go, and that's why a lot of those hot hatch cars are real popular. Request I just got for GBP NZD on the daily, still real tight range, trending up though. Can actually probably start to draw some trend up lines, maybe kind of sloppily down here. Still works as far as accepting trades on both sides of that. I want to see what took place Aussie wise. Yeah, so really not much out of those comments yesterday. Take a look at AUD CAD. Boy, that is just coiling right there. Jeez. Keep in mind, this is a daily right here. I mean, this is just a tight range, lots of indecision candles. Euro AUD, please. Let's take a look at that. Still tight range daily. Even drop down to the 4-hour on this. See how a lot of times if you get down to a lower level, see how defined this range is. Now we're back up against it, right? Arguments saying triple top, right? No. Sometimes these triple tops can just absolutely blast through. But I just don't think that personally there's enough catalyst in other areas for any type of pin action to take place on this. For the question I got on the NASDAQ, a lot of the tech stocks, even some of the biggest names out there, like my most hated company, Facebook, for reasons that will go unstated. These guys have been breaking out some solid bases. That's the key. They all still have ridiculous PE ratios, right? So the price earnings my opinion, needs to catch up due for a correction. But all the chart pattern folk, looking for bases and breakouts essentially, and that's why NAS has started to. But keep in mind, though, I mean, the biggest and the power players of the NAS, especially Nvidia, and a couple others, have really been just ripping up. And honestly, the semiconductor area we have, whether it's Taiwan Semiconductor, which is one of the planet's largest foundries, they are just cranking out 3 shifts, and they're building other plants. I mean, the demand for semis is just off the freaking charts. And there's a lot of global vehicle production that has suffered because of the shortage in chips. That's why you guys are seeing cars, I would imagine, pretty much around the globe, I would think, go up in price, both new and used. And a lot of people didn't buy cars, stake Uber and stuff. And then after the pandemic hit, they all flipped out and started buying cars, at least those that could afford it. So no surprise, this is, again, a pin action play on semiconductors, right? It's just, I always sort of walk it back to pin 1 or the lead pin, because you want to see, what sort of started it all. But that's just a long drawn out answer to what's going on in tech. At some point, this is all going to come crashing down. Do keep in mind that July 31st is a moratorium lift on a lot of real estate. So I'll be paying close attention to real estate, both commercial, industrial, and residential, whether that's the builders, the REITs, globally. You want to see what's going on with these guys. There's been a lot of foreclosure and or rent moratoriums, which is essentially nothing more than telling all the renters out there, in some cases, you don't have to pay rent, which I think is foolish. Thank God my tenants have paid, or I would try and boot them. In any case, that's Euro. Let's jump over to the last request I got. I don't really show this currency much. It's daily. But pound yen, again, no surprise. Weakness in the yen, strength in the pound, right? Question I got on gold spot. This was a big. Now, remember, we're looking at the spot market, but if we were to look at just the GLD volume, okay, this is the ETF. This is a great place to, and other than the futures markets, which I try to get you guys head spinning on, but look at the higher distribution days of volume on this. I mean, this was essentially a leverage puke, probably by a lot of institutional and retail. They were just too levered in it, thinking this thing is going straight up without some correction, and they puked it out. But the multiple indecision days, couple of dojis in here, actually 1, 2, arguably 3 dojis. Now we're headed lower on a gap down. It's not looking that good, and this is all due to Bullard. I mean, we really can blame him. I'm going to point a finger at any non-voting Fed member, it would be Bullard and his comments about transitory inflation. And quite frankly, the guy's a smart guy, and he's probably dead right in this, and the market just doesn't want to hear it, right? So markets don't like inflationary processes because it turns Fed people and international central bankers from doves to hawks, right? Essentially, instead of sprinkling cash on global primary dealer accounts, they start pulling it back. It's a contractionary credit squeezing process. So just keep that in mind. My next question was on. All right, so let's just finish off the analyses on a weekly chart of gold. So look, check this out. So on the weekly chart, see if I can expand this out a little bit. That's a pretty solid support showing up here. This is a fairly new line. So as Desan's squeeze zone indicator must have found something inside the tea leaves that it's putting a yellow line or orange, whatever you want to call that color down there, which is usually a little bit of a stronger support than the red. Who knows? We could bounce here. I think the problem with owning either of these as an investment right now is that, I mean, we're seeing prices go up in all kinds of stuff. I mean, gas is just one example, right? I mean, it's come crashing down, and I guess we should probably do our little update here. on the FinViz charts, as I've shown you guys before. It's just finviz.com. Click on the futures markets. You can see the dashboard as a whole here. And then you just switch over to charts. Make sure it's on the daily. Let me just shrink this down. And then you could begin to, actually, you know what? You can begin to see the correlations between stuff. This is strictly a daily chart. Each of these candles represents a single day. Obviously, the lift in the dollar, drop in the euro. Again, it's been in a confined trend, or a very trend line drawn downtrend. Obviously, pounds reverse based on the dollar's lift, right? And then the same thing. Look at CAD in relation to US. Look at CAD in relation to euro. Notice these charts look the same. Hell, this one, and this one all look the same. Hell, even this one looked the same, right? And it's all because of the lift here. Some have had larger moves in relation to that, but the pin action's coming right here, in my opinion. There will be other factors that play into this. Obviously, Brexit for GDP, but just speaking just real general macro on this. This is a great example. You can see relation of the notes. Don't pay as much attention to the 2-year, but pay attention to the 35. But look at lumber. The interesting thing is look at sugar. It's still high, right? Look at OJ, still higher. And if I look at weekly charts, it can be even uglier. So here, I'll show you the weeklies. So if this doesn't look inflationary to everybody, I don't know what is, right? Now, obviously, some of them got ridiculously extended like lumber, right? It's just been cut in half from the high. But something like coffee, look at that, still high. Canola come back down a little bit. Look at cotton. Things up just a absolute bunch since the low in 20. I mean, this is inflationary stuff. I don't know about rough rice, but certainly soybeans, oats. A lot of them got way ahead. I mean, look at this, the soybean oil. I mean, this is bananas moves in this. I mean, all these basic producers around the world, like an Archer Daniels Midland, and all the main producers like 3M of just chemicals that go into everything, their costs are double. I mean, if this isn't inflationary, I don't know what is. And Bullard, God love him, he was the only one willing to step up to the plate and bring that up. So, copper, these always, this is foundry issues, right? Talk about semiconductor foundries, they call them foundries. So these are all found. This is a foundry driven rally. There's a demand for semis. So obviously the copper would be way up. If you look at copper on a monthly, this is some of the highest highs we've seen in 20 years. So, I mean, that's, a lot of people are like, well, how did copper? I mean, it was, they call it Dr. Copper for a reason, right? Because it usually shows the health of the market, because this is the primary component in the vast majority of electrical circuits. You can see where we broke out here from a very long downtrend. This was the tech wreck, mostly from 2000 through 03. I mean, just what a beautiful time to buy copper, and the thing just absolutely soared. And then coming into the global financial crisis, which is mostly just fake mortgage pools, got just absolutely crushed back down to that long-term line. So this is actually, I've never shown this before. This is actually a pretty decent example of how important long-term trend lines can be, because look at this breakout, arguably here, maybe even a bit higher, but look where it absolutely stopped in the 09. So taking a look at longer term charts, drawing that support line right there, at least from a commodity buyer. They didn't have a copper ETF back then, but they do now. It's called PRX, and I wouldn't be buying it now. But if it pulls back again, it's a pretty good gig. All right, enough of that. Let's move into some crypto. So if you hadn't heard the crypto news, drop back to daily here. If you hadn't heard, here's the whole shebang. I like to show always the last 6 months on a daily. A little longer here. Let's go back. Actually, you know what? Maybe this would be a little easier to see. How's that? So we have, supports 31,500-ish, right? That's a support. Broke from our, probably get rid of this. I just keep this under, so I'm trying to get you guys in the visual habit of seeing triangles and flags forming. It could either be bearish or bullish flags. But right now we've got some support. Notice every time this thing gets down in that 29 to 30,000-ish coin area, the volume comes in. So there's buyers down there supporting this. Personally, I think that every time this happens, you're just continuing to overload the boat right here for an absolute flush lower. These are all the weak longs that get in because they're not letting a perfect, I shouldn't say perfect, they're not letting a solid chart pattern play out, right? This is not a tradable base, in my opinion, right? Now, if we had a couple more folks down there and you built a cup, right? And then had a smaller handle build up here and every time we had a pullback, volume dropped. That's the kind of pattern you want to see for a potential breakout. And it probably seems ridiculous for somebody to say, well, why would I buy it on a breakout of, the 40,000 or the 41,000 level area? But the yellow line is telling us we have some serious resistance up here. And with the solid squeeze zone, this indicator takes into account about 14 different factors, sort of like a little algo, support and resistance. And the orange is a considerably bigger ceiling to get through than this red is on the bottom. So just remember that. All right, what else? Yes, you're welcome. Thank you. I do look forward to seeing everybody that's going to be showing up in Orlando. Hopefully we can get on planes. So you guys don't have to be flying on prop planes back with the chickens, right? Because at this point we're running out of seats. It's ridiculous. And one of my buddies is a pilot for Delta. He's almost making it to captain status, which is a big deal. It's over a 300K a year job, by the way. He says they can't find any pilots. There's a lot of pilots that just up and retired. It's crazy. Said almost like 10% of Delta's senior captain workforce just freaking hung it up, which is just bananas. Again, labor shortage, and many in some areas of the world, governments, main government is your competition for labor because they're continuing to pay them some form of unemployment. So once that expires, I think we'll see a lot of the folks get off the nursing of the government and go out and get a job, like we're seeing really be the case in California here. And it's causing a lot of unrest because a lot of people are sitting around with nothing to do, getting government checks. And it just isn't, I should say, a productive for society, right? So my talk, and I've gotten a lot of suggestions on this. I'm going to be talking about a couple of different things, but one of my breakout, and you call it that, one of my on-stage presentations with my happy laser pointer, I can get back, is going to be on the Holy Grail in trading. And it really just has to do with the same concepts I've been talking about here. I'm going to put it a little bit easier to frame, but it's really just a risk reward, right? It's just understanding that you don't have to be really, really high percentage win rates if your risk to reward is tight, and how to build that ratio. You could apply that ratio to anything, currencies, commodities, buying a Toyota, right? Buying art, real estate. I mean, you can use that risk to reward ratio on any asset class, generally globally. So I think it's super effective. Now you can even use the risk to reward ratio for, picking up men or women in a bar. So, I mean, you can use it for all kinds of different things. But in any case, that's Bitcoins. Take a quick look at the Ethereum, which is looking a little more productive from a chart perspective, I must say. So here is which arguably is a real solid support line. I drew it as a green line, but we had a red show up. Again, just like the other, we have a pretty strong resistance up at this 2,700 area. So just note this, if you will. And that is it for all the questions. So do keep in mind, if you are feeling generous, I always tell you, go out and spread the word of Telegram. Right? It really will help you. Make sure you go in, take a look at all of the photos, different types of risk measures. I think this should be an absolute, then an entire day, if not a whole week, in every college business class, and for that matter, even any undergrad credits, should be spent on this chart. If people just study this, and we did test questions even for someone like my 13-year-old son Evan, and him and I really begin to get into this because he wants to start to get into trading, and he's actually going to help us with different stuff and watching the markets and stuff when we're out in meetings in Florida and so forth. So it's going to be quite helpful to get him plugged into a risk reward. I think this would help every person on this entire planet if they memorize this chart, and it's a couple others that I have. So take a look at that as well. And I wish you guys all a happy week. Be kind to each other. Don't fall for the BS that your politicians are handing out to you, because most of it is crap from both the right and the left. Do your own research and do a lot of it. Wish everybody a great week. May the trades be with you.